Oh, come on. Do you know how difficult this is taking blood when you're trypanophobic?
Firstly, Harry, nobody knows what trypanophobic is, but is that your way of saying you want to talk about blood today?
It is indeed. Trypanophobic, fear of needles, you knew that. But before we do so, before we get into it, let's have a quick word from our sponsor. Okay, so welcome back to the Academy. Hi, Nick. Yes, we do want to talk about blood today. I want to talk about what's in the blood. So let's get in there and let's talk about the blood indicator,
You want to know what it is?
please.
Well, look, I came across this thing, I don't know, a year ago, 2 years ago. Everyone seemed to be throwing this thing around as an indicator of when there is trouble. So a way to find tops of markets and what the blood indicator is the ratio of 3-month rates versus high yield spreads. And here's one I prepared earlier. So I shall share and show you what this thing looks like firstly, and try and explain it. So you've got that, I can see, right? So the red thing is actually the ratio of 3-month rates versus the high yield spread. You can get that off TradingView. Those things are freely available. And the green line here is a 100-week moving average, or at least that's what it's supposed to be. And then you can see on these blue arrows here, which I've sort of thrown on the chart, is the time when the blood indicator, the red thing, has crossed the green moving average. And what that has sort of foretold is problems in the equity market. So in orange down here is the S&P. And as you can see, this is foretold of sell-offs in the equity. It came in here, sort of sell off there. This little part of the equity sort of sell off blood indicator didn't pick it, but at least, when it has triggered, it has previously, foretold of some problems ahead. Why would that be? I mean, what is this thing about? So if you think about it logically, right, 3-month rates versus the high yield spread. If the indicator is falling, what would that mean? That would either mean short rates are going down or spreads are increasing on credit, on high yield credit, or both, right? And why would rates go down be foretelling of problems? Well, I think the reason that the two elements are put together here in the ratio by whoever came up with this wonderful thing was to say, well, obviously, if there are concerns about recession, and of course, these days, it's one of the things that people cite as a reason not to be cheerful is because there are recession fears. And so they say, well, obviously the Fed, got to cut rates. And so they say, okay, 3-month rates are going down. And of course, commensurate with a recession is when spreads start to increase. So you would expect this blood indicator to go down. And of course, it has been going down. And as I've been monitoring this thing, bang, a couple of weeks ago or a week and a half ago, it just broke through this thing. And then, I was with a client and said, well, it's gone through. Is that a reason to be concerned about markets? Is this now spelling doom and gloom? And my response to that is not necessarily. And here's my thought process here. In fact, more than not necessarily is not now, right? It's too early to be bearish on the market, even though the markets were, I think at the time, at the lows. And at the time, it was last Thursday, I said, no, it's still, in my view, just to sell off in a bull market. So, my view is you're still meant to look for areas to buy the dip. And why am I not panicking now that this indicator, which it seems to work since the last, what's that, since 1997 over here, that I'm going to ignore it. And the reason is that on previous occasions, and I'm going to put up the junk bond here in purple. Of course, the history we've only got until prior to the financial crisis here, or just at the financial crisis 2008. And what you see is that, you can see it badly here, but if I sort of zoom in, that in previous times, what happened was when the blood indicator triggered, the price of junk paper was falling every time, right? As far as I can see on this thing, and I sort of scroll back, the price of this, the purple is falling, and purple is falling at the time when the stock market is a bit iffy. Again, here, purple actually collapsed. It did take some time. Yeah, so we did get, time to react. Purple was still rising up here. When was that? That was in the COVID times. And then, of course, it fell lower. At this time, when the stock market fell, again, the junk bond prices were falling. Again, it sort of made sense. Yeah, stocks go down, high yield goes down. Things are very closely correlated. But if you look here, right at the very end, and I know this is a weekly chart, so let's zoom in a little bit more. And what you see is that the orange line, which is the S&P, has been falling. And yes, the prices of junk paper has fallen, but hardly noticeable. So, junk bond prices that did bottom out on the day that I said, don't be worried, because I don't see them noticeably falling. They've just sort of come off the highs, but that's not a reason for panic. In fact, they've recovered almost all the way back to the higher, still probably half a point off. But so whilst the junk paper is still reasonably well bid, my view is I'm going to ignore this blood indicator. And, lots of hedge funds or lots of institutions who follow this thing obviously would be following it. A lot of them will be following it blindly. And I think if you sort of look under the hood a little bit here, credit, which it's supposed to signify credit problems, aren't necessarily showing up. I've tried the same thing with the HYG ETF, which is also high yield ETF, also has the same price history and also showing the same price action. And there we also, as of yet, don't see any problems in high yield paper, still reasonably well bid. For that reason, I'm ignoring, for now, this particular move in the blood indicator until I see a signal, my own signal from the high yield paper saying to me, no, they're turning down properly now, they're not just dipping. So that's the blood indicator. That's what it means. That's what it does. And that's why I'm ignoring it now, even though, on a history basis, anyone who's just looking at the indicator would say panic.
Yeah. Well, which is always interesting because, often people will say, and I think you and Torsten have said it in previous conversations, sometimes the equity markets, for example, can get carried away. There's a lot of euphoria that goes on. And that's when you see these perhaps slightly unrealistic valuations. But when the bond market turns, then you often get the people saying, okay, it's the equity boys are ignoring this, the bond guys, the maths guys, if you will, and you and I both come from a bond background here, will often sort of, ring the bell first, if you will. So, at the moment, they're not ringing the bell. So
Exactly.
I guess, looking near term, you're still sort of quite positive with things like the S&P 500, NASDAQ, Bitcoin, so on and so forth that we've been having conversations on. You
Yeah,
still
absolutely. I
fairly,
mean, we, in the first sort of bearish view that I had sort of in November and, through various videos with Torsten thereafter, the bearishness was down to 5,200 on the S&P, but the first target was around 5,500. We kind of got there. So the question comes now, what happens? And I think most people have now come to, even the super bears, will be saying, okay, we'll probably rally up to 5,800, 900. Then the second wave will start, and then, down to 5,200 or lower, et cetera, may well be. I'm not in that camp at the moment, I must say. I am of the camp that I think the correction is over for now. I think I'm still in the camp of we'll see a new high in the S&P before the markets do turn lower later on in the year. But I think there's still some tailwind from, liquidity, from, M2, from, all sorts of, if you just think about it, I'll talk about this with Torsten tomorrow, is that I think there's a lot of bad news already out. I think the Trump guys are going to be sort of well prepared now to put out some good news. So, I'm reasonably here positive on the markets, but I would say, obviously when we get to 5.8, 5.9, if we get there on the S&P, then, sensibly you'd have another look and say, are you still of that view? And I'll have a look then. But right now, it looks to me like I think we've seen the low for now.
Certainly, price actions, indicating, we're not getting too carried away. We're not getting carried away here. We're not going to go again. It's going to the moon, but I just feel a little bit more positive still on this. And I agree with your, short-term correction that we've got ongoing on here. I'm still in my IBIT position, just in case anyone's interested in that. But I'm running out of time, and I've got a call debit spread on that, so I need to think about closing that out fairly soon. But I'm optimistic. I'm optimistic, and as I say, recent price action is giving me, a little bit of comfort. And certainly what you've just been talking about there, it adds to the story. None of us getting carried away here. The story is ever evolving, and I'm sure we'll come back with a new view very, very shortly.
Indeed, we will.
Good. Okay, so hopefully you've enjoyed this very brief video. Again, like and subscribe. Please stay with the channel and give us any comments. As always, any questions you may have, you can always catch myself or Nick, and we'll be back with you very, very shortly. So thanks again, Nick. Very useful information.
You're welcome.
Adios.
Ciao.